Hi, Mark here from Squeeze Trader, and of course this is just advice, so the legal bit. And today what we're looking at is going to be the MACD DMI Squeeze. Now this works on any time frame. I found it to be the most lucrative and the most profitable on the daily, but you can use any time frame to find this. We need a MACD, which is the moving average conversion diversion indicator, which is standard across all platforms, and with the standard settings of 12, 26 and 9. We also need the DMI, which is the directional movement index. We also need an ADX, the average directional index, on top of that as well. Volume with a moving average of 50. That's 50 look back period. So that's what we need. So what we need to follow is 5 factors here. So what do we need to look at here? Well, we need a 1, 2, 3 or an ABC in price action. We need a MACD line and the signal line to be at extremes, whether they're extremes of high or extremes of low. We need the volume to be above the moving average that we put on, which I'll show you in a moment. We also need the directional index positive and the directional index negative to also be at extremes. And in an ideal world, the ADX line weakening. If the ADX line is strengthening, it means the trend will continue and we haven't found the top or we haven't found the bottom. So let's have a look at the currency pair that I found that this works for. Now you can see here, this is often called a pairs trade. What I have here at the bottom is the FXY. Now the FXY is an ETF that tracks the price of the Japanese yen. The Japanese yen to date is down 10%, which is quite significant for a currency. The orange line is the US dollar Japanese yen. So it's the US dollar against the Japanese yen. So as the dollar strengthens, the yen weakens. And that's clearly, you can clearly see that here. Now, whenever we have a bulge and then a coming together, a bulge coming together, a bulge coming together, a bulge coming together, we have a correction in the opposite direction. Okay. So here, dollar yen went down as the price of the yen itself went up. And now we have another one here, and this is quite extreme. So let's have a look now at the live charts, and as you can see they're live here because the prices are going. Now on the left hand side, the FXY, which is the ETF that tracks the Japanese yen, there is no activity on here because it's not open yet. This will open at the US Open in an hour's time at 2:30 BST. But of course currency pairs are always open from midnight on Sunday, depending on your platform. So we know that this is live at the moment and it's beginning to turn over here. But again, we don't know whether this is the top yet. So remember the 5 things that we're looking for. We're looking for an ABC. Well, we've clearly got that here. You can see that's down, up, and then down again. And they're of equal length, each leg. Now, do we have that here? Well, we have our A, or our 1, our 2, and our 3. Now, when I was looking at this last week, this looked like the top. This looked like a top-in pattern. You could see that both wicks here we can class that as a tweezer top. Sorry about that. But unfortunately, or fortunately for us, it went a leg higher. Now that could be what we call a banker's candle. Now on the website, and depending on the package that you subscribe to, you will see a detailed report on the commitment of traders, which is the banks and large hedge funds and how they're positioned for trading. So I would see this now, as we sit today on Monday, the 18th of October, I would have a look. I would look at this as a final push higher to collect any stop losses that retail traders would have in this area. But that's another video entirely. Remember what else we're looking for. We're looking for extremes of the MACD and the signal line here. As you can see, that's extreme, and it's squeezing, or it's touching, shall we say, the extremes of the DMI. So this is a 14 period DMI. So let's have a look at this. So let's have a look at how we've got this set up. We don't need the actual line itself. We need the negative line and we need the positive line, and we need them set to the histogram. So we have the difference between the two. And then we have our ADX. Okay. All right. Now we need that because that gives us a strength. So as we can see here, it's a strong down move here for the yen, and that's obviously echoed in price. Okay, so we have our 1, 2, 3, we have our extremes, we have our DMI extremes, but unfortunately we don't have the ADX line turning over. So this is still representing a very strong downtrend. Now it could turn over at the open or during today's trading session, but we don't know that yet. So I wouldn't be taking the pairs trade. I wouldn't be buying this at the open. I'd wait to see for the ADX line to roll over. And that's why there's no volume on this chart, because we're not ready to take a long position on this. But over on this side, which of course is the dollar yen, as we can see, going in opposite directions for reasons already explained, we should have, looking at this, we should have all 5 of our rules in place. We have our DMI at extremes, and it's extremely bullish. We have our MACD like extreme. We have our volume above the moving average. Now, the moving average I've got here is the Wilder moving average, and it's a smoothing moving average, but you can change it to whichever one you want. And they're all pretty much do the same thing. So if I send this, switch this to exponential, you'll find it's roughly in the same position. If we go to simple, there's not a lot of change in it. I just use the Wilder smoothing because I want a smoother look on a look back period to see where the volume is. Now there's a lot of volume going into this market and has been pretty much all year, so it very rarely dips below that. But here, where we're looking to turn over to the downside, we do have an increase in volume, which is important. We had an increase in volume here and we went to the downside. We had an increase in volume here and we went to the downside. So all 5 elements are now in play, because number 5, and arguably the most important, the bull trend here is now beginning to turn over. So if that's the case, I think we need to think about entering a trade here. So let's enter a trade live. So we'll just do a small position and we just sell it, and there we are. So we're now
sell it, market executed.
Thank you. So we're now live. Okay, so we've got a trade on here. Now, stop losses, everybody will tell you, and education tells you, you put it at the higher height. I'm not going to put a stop loss on. The reason I'm not going to put a stop loss on is because I need to see the market sort itself out. For instance, I need to see what's going on with the yen itself from 230 throughout the day. Then I will think about putting a stop loss on. Okay, same thing goes for the target, but your target could be here. It could be here, your target. So let's draw a horizontal line for you if you wanted to be conservative here. Of course, your target could be all the way down here or to that area really, which probably is going to be the most likely because we have structure throughout here. Okay, so the 5 rules, did we have them on that chart? We had the price action. The MACD line and the signal line are extremes. The volume is above the moving average. Both DI is our extremes. ADX line is beginning to weaken and we need to get in early here. We can't come in late, otherwise the risk to reward on your trade won't be good enough. So I found this trade by just looking, knowing that the yen down 10% this year. So let's have a look at what's happening, a currency against the yen, and of course here. The other rationale here, if you have a look at our Twitter feed, you will find that the banks and hedge funds are 76% bullish now. Every time they're 76% bullish, there's a retrace. Okay. So, if you like that, please have a look at squeezetrader.co.uk. Please have a look at our Twitter feed at SqueezeTrader01, Facebook SqueezeTrader01, and of course our YouTube channel, where this video will be posted along with a few others as well.